Wednesday, April the 23rd, 2025. And welcome back to the FinWell Daily Brief.
Great to be here.
This is our 24th episode, and I'm absolutely buzzing to dive into today's financial landscape with you.
A very warm welcome indeed. Always insightful to unpack the day's market movements.
Let's kick things off with a fascinating financial fact of the day. Really makes you think.
Oh, go on.
Apparently, only 27% of Indian households currently have a comprehensive financial plan. Just 27%.
Wow, only 27%.
Yeah, that highlights a huge opportunity, doesn't it? For us to become more proactive about our financial futures. It really underscores the importance of what we discuss here.
Absolutely. It paints a picture of a significant portion of the population that could, potentially benefit immensely from structured financial planning.
Definitely. For their own well-being and the overall economy, too.
Precisely.
Okay, let's get straight into today's market action, Len. Picture this. Based on news coming in from, all corners. The Nifty 50 closed at a strong 24,322.05. That's a jump of 154.80 points, a healthy 0.64% increase. A really positive close for our main index.
A robust climb indeed. Reflects a buoyant mood among investors in those top-tier companies, I'd say. Sets a positive tone.
And the enthusiasm didn't stop there. The Nifty Midcap 150 also joined the party.
Right.
Closing at 15,927.40, up by a respectable 49.35 points, or 0.31%.
Okay, decent gains there too.
But the real spark today, I think, came from the smaller players. The Nifty Small Cap 250 really took off.
Did it?
Closed at 15,878.05. A significant leap of 126.12 points. That's a fantastic 0.80% gain.
Oh, wow, 0.8%. It's heartening to see such broad-based participation, mid and small caps showing strong upward momentum that often suggests, more widespread optimism.
Exactly, a wider appetite for growth across the board. And to round out our market snapshot, the Nifty Total Market Index finished at 12,481.85, gained a solid 67.05 points, or 0.54%.
So positive across the major indices then.
Pretty much.
Yeah.
Now, let's talk about the steadier side of things, bonds and currencies. The 10-year Indian government bond yield held firm.
Oh, no change?
Nope. 7.12% unchanged from yesterday, like a steady hand on the tiller,
Right. That stability could indicate a period of relative equilibrium in the fixed income markets. Investors aren't seeing immediate triggers for big shifts, perhaps.
Makes sense. And what about the tug-of-war between the rupee and the dollar?
Always interesting.
The INR USD exchange rate closed at 83.0 rupees per US dollar.
Okay, so up slightly.
Yeah, showing it's a slight upward tick from yesterday's 83.00.
Yeah.
A minor move, but definitely something to keep an eye on.
A marginal depreciation, yeah. While it seems small, these fluctuations can have ripple effects. Think trade balances, import costs, so cracking this is crucial.
Absolutely. All right, now for the news that really got the market buzzing today.
Okay, let's hear it.
Picture this. Our Indian IT stocks were the stars of the show, leading the charge in market gains.
The IT pack. What was the catalyst?
Well, there's a growing feeling that trade tensions between the U.S. and China might be easing a little.
The trade tensions narrative again.
Exactly. And for our tech giants, who have significant operations, over there, that's a major confidence booster for investors, like a breath of fresh air for the sector.
What's truly interesting here is that interconnectedness, isn't it? Global geopolitics and our local market dynamics. This perceived easing, even if it's tentative, it provides a more predictable operating environment for those IT firms with international exposure, directly impacting their revenue forecasts and, investor sentiment follows.
Absolutely. And speaking of tech powerhouses, SAP SE.
Oh, yeah.
Reported an incredible 60% jump in their operating profit for Q1 2025.
60%?
Yeah.
Wow. What's driving that?
Their cloud revenue is absolutely booming. It just shows you the immense momentum behind cloud tech right now.
That's remarkable growth. It really underscores that global shift towards digital transformation. Businesses everywhere are adopting cloud solutions for scalability, efficiency. SAP's numbers are a strong indicator of that trend.
Definitely. Then we have GE Aerospace.
Okay.
Soaring past expectations for their Q1 results and even reaffirming their outlook for the whole year.
That's a strong signal.
It really is. Shows their strength and the resilience we're seeing in the aerospace industry right now. Paints a picture of continued growth in air travel and related sectors.
GE Aerospace's robust performance and positive guidance, it speaks volumes about the underlying strength of the aviation sector, navigating through global economic currents pretty well, it seems.
Now hold on to your hats for for this next one.
Uh-oh.
JP Morgan is predicting that gold prices could skyrocket.
How high are we talking?
Over $4,000 per ounce by the second quarter of 2026.
4,000? Seriously, what's the reasoning?
They see an increasing likelihood of a recession on the horizon. It really makes you think about gold as that classic safe harbor in stormy economic seas, right?
Right. This forecast from JP Morgan highlights that traditional role of gold as a hedge against economic uncertainty, potential downturns. If recession concerns escalate, well, we could indeed see a significant jump in demand for gold as a safe haven asset.
Makes you wonder. Okay, back on the home front. ICICI Home Finance had a very successful bond offering. They accepted bids totaling a massive 7 billion rupees.
7 billion for bonds maturing when?
In just over 2 years. 2 years and 2 months. This strong demand really underscores the activity and investor confidence we're seeing in the housing finance market.
That's significant. The overwhelming response signal sustained investor confidence in the housing finance sector, and that sector plays such a pivotal role in driving growth in the broader real estate market.
True. People are clearly still investing in property.
Seems so.
And finally, on the international stage, U.S. Vice President J.D. Vance emphasized the growing strength of trade relationships between the U.S. and India, noted significant progress in ongoing discussions. These kinds of international partnerships are just so vital for fostering economic growth, creating opportunities for both nations.
Absolutely. Deepening trade ties between the U.S. and India hold immense potential. More trade, investment, collaboration across various sectors. It's all good news.
Okay, let's take a step back now and look at the bigger picture, the market outlook and what it all means for you, the listener.
Right, the analysis part.
As we've seen today, the Indian stock market is continuing its upward journey, really fueled by positive vibes from the global scene and that strong performance from our IT sector.
Yeah.
Feels like we're riding a wave of optimism, doesn't it?
The current positive trajectory is indeed encouraging, however. And there's always a however, isn't there?
Ah, yes.
It's crucial to remember market dynamics are complex. A balanced perspective is always wise.
Absolutely. And while things look bright right now, it's always prudent to keep a watchful eye on potential headwinds.
Like what specifically?
Well, geopolitical developments, for one, and those currency fluctuations we talked about earlier. They could still introduce some bumps along the way. It's about staying informed and prepared.
Indeed. Remaining vigilant about potential global and domestic uncertainties is just key for navigating the market effectively.
Now let's zoom in on some specific sectors. First up, information technology.
Right, the star performer today.
As we've been highlighting, the optimism around global trade is providing a real boost here. And the growth potential continues to look incredibly promising, like the wind is in their sails.
The IT sector's growth narrative remains compelling, driven by continuous tech advancements, increasing global demand for digital solutions, and that easing of trade concerns just provides an additional tailwind.
Agreed. Then we have the real estate sector.
Okay, connected to that ICICI bond news.
Exactly. The fact that we're seeing increased bond issuances, particularly in housing finance like that ICICI example, strongly suggests a positive outlook here. People are actively investing in property, and that has a ripple effect.
Yes. The robust activity supported by strong housing finance demand indicates ongoing investment and development in this crucial segment.
And finally, let's revisit commodities, particularly gold.
Back to the $4,000 prediction.
Yeah. That prediction of a surge in gold prices really speaks volumes. It suggests a potential shift towards those safe haven assets as investors maybe prepare for possible economic uncertainties.
It all comes back to that anticipation of a possible recession that JP Morgan highlighted. It reflects a potential investor strategy, seeking refuge in safe haven assets amidst growing concerns about future economic stability.
So what's the key takeaway for your investment strategy? What should you be thinking about?
Boil it down.
Well, it's a principle that has stood the test of time. Diversification is absolutely essential.
Couldn't agree more.
You want to spread your investments across different sectors, different asset classes. Think of it as not putting all your eggs in one basket. It helps cushion you against risks in any single area.
Diversification remains a cornerstone of prudent investment management. By strategically allocating capital across various sectors and asset classes, investors can effectively mitigate the impact of potential downturns in specific areas. It's fundamental.
And it's not enough to just diversify and forget about it, right?
Not at all.
You need to stay in the know. Keep a close watch on those global economic indicators, any shifts in domestic policies. These will be crucial in helping you navigate the ever-evolving market landscape. Knowledge is power here.
Continuous monitoring is paramount. Global indicators, domestic indicators, policy changes. It's all vital for making informed investment decisions and, importantly, adapting your strategy as conditions change.
So, to sum it all up for today, the market has shown some fantastic resilience, hasn't it?
It really has.
We've seen strong gains fueled by impressive performances in key sectors and some encouraging news from the global stage.
A confluence of positive factors, definitely.
But, as always, we need to remain vigilant. Keep an eye out for any potential external shocks and shifts in the economic winds. The journey continues.
Exactly. Today's performance is encouraging, but maintaining that proactive, informed approach while being mindful of potential risks remains essential for long-term financial well-being.
And that brings us to the end of today's FinWell Daily Brief, our 24th episode. If you found these daily financial insights valuable, please do hit that subscribe button so you don't miss out on tomorrow's update. We've got so much more to unpack.
And for more in-depth discussions or just to connect with us, please do reach out to SOS FinWell on LinkedIn. We'd be delighted to hear from you and continue the conversation.
And now, to leave you with a thought for the day. Here's a powerful quote from the legendary Benjamin Graham.
Ah, classic.
The individual investor should act consistently as an investor and not as a speculator. A timeless reminder, really. Stay focused on long-term value and thoughtful decision-making in your financial journey. Have a truly insightful day.